The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, there's no news going on today, I guess. Shut the front door and raise the rent. Boy, oh boy. What a big surprise, huh? Anyway, let's see what happens. They're talking here in the Tiger Den about the Tomahawk missiles. Boys and girls, I actually met the man who developed those. His name was Dennis Regan. He was with the Navy, and he was a very, very smart guy. I went over to visit him several times. He was 5 sheets to the wind when it came to paranoia. Boy, that guy, he never used banks. He only used cash. And he was a very paranoid person, extremely brilliant. But getting on to the Tomahawk missile, what the Tomahawk missile does is that once it leaves its origin, as soon as it gets up in the air, it works on vibrations. In other words, it looks out for what the target is going to be, and it is programmed to search for it based on where it's supposed to be at any particular time. In other words, it heads towards Syria. It hones in on a particular spot, and as you heard on TV probably a few times, these things are fired from 1,000 miles away, and they actually come in within 1 yard of the actual target. And you could see that happening yesterday. But it's really an incredible feat when you stop and think about it. So this is going to be an ongoing occurrence, I'm afraid, with some of these things that we're having now. So we'll have to wait and see. Let's get on to the markets. Starting out with the DAX, as you can see, most of the markets across the world sold off a bit. They didn't go down very much, actually. We were down about 100 Dow points at one time. Then we came back to be unchanged. We hit some nice fib numbers on the downside, nice fib numbers on the upside, but not too much other than that. But, the trend is still down in this stock market, as we've seen over the past few weeks. So I don't believe anything has changed. We'll get to the bonds here in just a minute. But I wanted to mention that we're going to have Arch Crawford on at the break. Arch has got some real interesting things to talk to us about. One of the things in his newsletter focused on the possibility of an April 7th, war of some kind. And sure enough, we've got some type. This is not a war, of course. It's just a skirmish. But we'll see, how it all comes out. So we'll have to do one thing at a time here today. All right, let's take a quick look here at the gold market. This is where we were yesterday, folks. This was actually before the big run-up last night, but we had hit that 61% retracement down there at 1252. Now, folks, I got an email last night from one of you folks here at the Den thanking me for the buy point in gold at 1252. Folks, do you see anything on that chart where it says to buy gold? No. It was just major support is what it was. We had higher bottoms. We had a major support there. That's all it was. So I tried to tell the person in email, this is your baby. I mean, you take all responsibility for this. You take all the accolades. I didn't put buy here and sell there. I didn't do that. And I wish I had have, but anyway, that's just a chart pattern. That's all it is. There's nothing more than that. Nothing more, nothing less. And you took advantage of it. So it's your trade, not mine. I mean, I just gave you an idea. You're the one that has to decide, what you want to do. I mean, that's not the that's not the end of that world, that's for sure. Okay, let's take a quick look here at the gold on a little bit longer. First of all, before we do that, we want to take a look at silver. Just a second. I got to update the silver one. That's not right because we did go a little bit higher in silver. I want to do the daily chart in gold here, and we'll put this up here. And so you'll be able to see it here pretty easily. Okay. Yeah, the bonds was a little different story, Dudette. The bonds, We were on that one. Hold on just a second here. Let's take a look here at the gold here on the daily. You can see here that the long-term 61% retracement going back to that high comes in at around the 1280 level. We got to 1274 and change. So whether this is going to be, I think we've got a little bit more to go here because we've got the ABCD up here too. And it's a Friday in an up week. Unless we have a big reversal, we're probably not going to see that happening. Basically, we'll do the bonds here just a second. Yeah, I've got to do this in a hurry because we've got Arch on today. Hold on, let's do the bonds next because this is the one that we were posted yesterday, and we did get up there to that level. Let's put this up here, and we'll let the folks take a look at it here. This is the bond. This is before we had this last little run-up. This is where we were yesterday, if you recall, and we had one more run-up that we were looking for the bonds to hit, and that was this one last night. This was the larger time frame that we were looking at. This was the daily. We went right up against that downtrend line. This is a perfect parallel downtrend line. We have lower tops ever since January. And it was right in that zone there where you wanted to be taking a look at it on a very quick move here. So it's very interesting to see how it's going. Now, the dollar is actually should be very strong, and the reason why the dollar, we do have a lot of guns out there, folks. So that means protection. So the dollar gives you some protection when you have times that are a little rocky, which we have going on right now. We don't know how. There's going to be any type of a response from Russia from this. I really don't know. I don't even try to speculate on that stuff, but, you don't know what's going to happen. I do not believe it's going to escalate. I think some of these people are a lot smarter, with the exception of one place out there in Asia known as North Korea, are pretty smart. Hey, and I'm just talking about that too. I don't know that guy either, but he certainly doesn't sound like he's got all his oars in the water, or all the dogs are not barking in the kennel. So we'll see how that's going to go. Someone's asked the question, is this a major breakout in gold? Folks, it certainly could be. We broke above that 1265 level. Now we're going back now. We're going back down below that 1265 level now. Hey, Jimmy, let's lay off the over deposition of adipose tissue. I happen to suffer from the same disease he has. So anyway, let's move on to the other move. I wanted to put the bond chart up one more time because this is the one that we were keeping a look at yesterday. You'll see that we made a really nice 1.618 expansion off of the high on April the 4th. And so we'll see if this is going to be the case. And so we'll see. This is people here we're in the den here. We're chatting about the gold, but folks, this could be very, very bullish to the gold market. But now we're back to that same old breakout level of 1265. It really needs to hold that level, or it's going to have some problems. That's that's the bottom line. That usually is what that means. So we'll watch it rather closely. Let's get back to the U.S. dollar here. Oh, wow. First break, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're talking about the bond market. We've dropped off a full point from the non-farm payroll report, I guess, that seemed to be rather bearish. But let's move on here to the euro and the U.S. dollar, because we've got a potential here, for something really interesting to be happening. Let's just pull this up and we'll take a look at it. This is the, this is a 4-hour chart. And if you'll notice here that the euro has broken below the 61% retracement as we saw yesterday. We've now hit the 106 level. We are very, very close, folks, to that 105.85 level. That's going to be where you draw the line in the sand, if that's what they're using as vernacular in Washington these days. But that's going to be really interesting because you're going to have a really strong cycle phenomenon from early March. That's where your 78% retracement comes in at 105.90, 105.80, and then from the 61% run from the beginning of the year. This is a, goes back about 4 months, and you can see that one also comes in at that 105.85, and so that's what we're looking at. Everyone can see the ABCD pattern that we had up at that 109 level. That's mother, God, and country, but this is going to be very interesting too. The other thing that's really interesting about this is that between February and March is going to equal to the same move down that we're having from March into April. In other words, the same number of pips. We came down 337 pips in February, and this will take us down 337 pips, will take us to 105.85. So watch that level very closely. And the reason why it's so important is because you won't have to risk very much at that point. You've got it, 105.85. You're spot on, Mr. P. That's what it's looking at. So we'll see what it's watching. Now, if we take a look at the hourly chart, I wanted to to show you what we were looking at yesterday, because we did have a chance to hold that. In fact, the market rallied 70 pips after the non-farm payroll report and then quickly gave it back up, telling us that we still hadn't made that bottom yet. So 105.85, boys and girls, that's the one you want to keep an eye on. This is the one that you want to really, hone in on, and we're not very far away from that. So at that particular point, you don't have to risk very much. Usually when you trade the euro, you're looking at if you're trading the, what do you call it, the support on the bonds. Just a second. I will get that to you in just a minute. Well, the support on bonds is going to be near that old level of 150, 116. If it gets below 150, 116, that tells us that we're probably turned. And the fact that we've come down so quickly really makes us skeptical of whether that's going to be the number to watch, but that's what I would be looking at. They're asking me some questions about some other commodities. The wheat, I'm not doing wheat today, folks, but there is something on the radar that is related to the grains, but we'll look at this here. This is the soybean oil, one of my all-time favorites. And if you put it up here, you'll see let's get this moving over here. You'll notice that we're making a 3 drive to a bottom pattern on the 4-hour chart. This is over a 1-month period. That is a perfect A, B, C, D pattern. So the risk here is going to be, again, what I would think would be relatively small, but we'll see if that's going to be the case or not. But being a Friday, it is probably better to wait to see it on Monday. That's the main thing that I would like to watch. Now, yesterday we talked a little bit about sugar. Sugar this week, number 11 world sugar, went right down to the D point, and so far it's rallied about 70 pips, which is about $11.20 a pip. So it's about $700 off the bottom. So if you bought the sugar, you want to put your stop underneath those lows that we had yesterday. That way you'd be almost at a break-even trade, and you wouldn't even have to worry about that. Now, I don't trade the sugar, so when we do the 24/7 service for TFNN, I try to stay away from that. But that's neither here nor there. Okay, now the next question that we had was about the stock market. Oh dear, are you kidding me? Shucks. All I can tell you about the stock market, folks, is this rally that we had back last night. We got down to 22.38 in the S&P. We rallied up to 23.55. That was nothing more than another 78% retracement of the high that we made yesterday. No biggie there. So just remember that these markets have a tendency to jump around quite a bit. But overall, the scenario still looks lower in the stock market. Now, the only way it's going to change to the bullish side, from my perspective, is we need to get the stock market above 23.75 in the E-mini S&P. Now, if it can do that, then we're going to be looking at something like what happened on election night, where the news was very, very bearish, and the market says, goodbye, I am not staying down here, and then it could go a lot higher. But if we close below, by some stretch of the imagination, 23.38, then all bets are off, and we're going to be looking at a lot lower prices, which would be, something that would be, very interesting, to look at. So those are the ones that that seems to be on the radar this morning that look pretty interesting. But the news last night was, Sarah and I both stayed up quite late to see what was happening in the world as far as what was going on in Asia and things like that. And it was really an amazing time. Hopefully, the people that, the innocent people didn't get hurt, and the bad dudes did. But you never know about that kind of stuff. But boy, I tell you, I have to agree with the president. When I saw those pictures of those babies being gassed, that would have done it for me, because I certainly don't want to. That's just a little too scary for my playbook, the way I look at it. Okay, now we've had another question about the hogs. Yes, the hogs have had a pretty good rally since Monday. We rallied 2 cents yesterday. I think that if you bought the hogs, here again, I don't trade hogs at all anymore. There's just too many other things to trade, but they had a beautiful pattern down there, had a nice rally. So if you were able to get into the hogs, all you have to do is to put your stop at break even and see if they're going to run some more. Otherwise, you don't have to have any risk at all. It's all about risk assessment, folks. These patterns fail quite a bit, but they also work quite a bit. So try to find the ones, that fit your risk temperament, and those are the ones that will get you to the promised land for sure. In a few minutes here, we're going to take another break, and we're going to have our good friend Arch Crawford on. And Arch is going to give us some really fun things. We're going to talk about some old historical stuff, but it'll be a good thing to chat with him as we come on when he comes on the show at the half hour. We will certainly do that. Next week, I'm hoping to have Bill Meridian on from Cycles Research in Vienna, Austria. And we'll be right back after these few words. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're a little delayed here on Arch. I hope we can get him this morning. I know he was up late last night, as most of the people that were watching these markets. We had some pretty good swings in gold up and down, $12, $15, and we'll see what's going on. Okay, let's move on here. Okay, let's just, I understand that was my fault. I told him 9:30 in the morning, and he assumed it was 9:30 in the morning Tucson time, and so we'll have Arch on at another time. Not a problem. My fault, by the way. My bad, so just keep an eye on it. Folks, watch, there's another one that's on the watch list that looks pretty interesting here. From a longer-term perspective, and that is I just wanted to show this is not quite updated, but it's within a few hours, and that is this is the Australian dollar and how it relates to the gold market. As you can see, it has a very high correlation on a longer-term basis. This goes back for a very long time because Australia is very big in minerals, of which gold happens to be. But if you'll notice on this Australian dollar chart, you have this ABCD format completing, and that's exactly what we've done. We went down to that 75 level. We're trading right there, right about now. That is a perfect ABCD. And usually when gold goes up, the Australian dollar goes up. But as you can see, for the past 3.5 weeks, that has not happened. So this correlation might be shifting for the first time in a long time. I bring this to your attention because this has such a high correlation. It's one of the things that should make gold very, very strong, and yet this is an anomaly. Now we're going to see the South African miners and the other gold miners are also in that XAU are really lagging badly as we walk through some of these things that were happening. I had a question last night about the passing of Don Rickles. The person asked me if I'd ever met Don Rickles. Yes, we did. I met him a couple times. Hey, we got the man on the line here. Arch, are you there?
Yes, I am.
I'm sorry, Arch. I meant to tell you it was 9:30 Eastern time. So thanks for.
Yeah, I said 9:30. I said 9:30 here, and you said yes.
Yeah. Well, I was coming out of the 12th round knockout on that one because I was a little punchy. But we got folks. This is Arch Crawford of Crawford Perspectives, and Arch, tell the folks what you said in your newsletter. Because I get it and I read it, and you said on April 7th there was a chance for WAR, and that's about as pretty close as we come. You want to tell the folks what you said?
Well, the last paragraph on the first page says, watch April 7th plus or minus 3 trading days for further hints of the developing particulars in politics, economics, natural disasters, excessive mental states, accidents, hospital admissions, warlike posturing, etc. We haven't experienced these intense emotional outpourings since Princess Diana died. We expect another powerful burst of solar energy on April the 7th as Earth conjoins heliocentric Jupiter, both squared by Pluto. Look for extremes.
What do you think this will have long-term applications here with what's going on in Syria, or will this be a one-shot Corrigan or something, or what's your feeling on that, Sam?
My opinion is that it's probably like when Ronald Reagan had a one-hit on Gaddafi, and he knuckled under after that and was quiet, and he did not. Yeah. We didn't need to unseat him. In other words, that was in a larger Soros kind of plan to form a caliphate in the Middle East.
Yeah, I was in New York when Gaddafi came into the United Nations with his 245 pearl-handled automatic pistols that he was brandishing when he went up to the podium. I said, boy, that boy's 2 French fries short of a Happy Meal when I saw that. But anyway, this they really got some weird dudes out there. That's for sure. Arch, I had a couple
I think it's
questions.
just a one-shot hit like that was, and it because it's a Russian ally, it'll take the heat off of the thing about him in Russia, too.
Well, that could be. It could be something good come out of it. I hope anyway. I couldn't stand to see those pictures though. That just literally made me ill. I just can't believe people would do something like that to another human being. But you never know what's going to happen. Sam,
well, we know a little about history, and you
know a lot about history. Hey, speaking of history, we got a question from one of our listeners. How in the heck did you ever get started in astrology? A young guy from South Carolina. How did that all happen?
North Carolina.
North Carolina. Oh, that's right.
I was Bob Farrell's technical assistant at technical market analysis at Merrill Lynch in New York, and the day before my birthday, the story came out on the front page of the Wall Street Journal about people using astrology in the markets. Mm-hmm. So I went and met them all and bought all their books.
Mm-hmm. Did you learn a lot from Bob Farrell?
Yes, but I have an email from him saying, he said, I didn't teach you much. You knew it all when I got here.
That's pretty funny. Well, I can remember when you lived in New York back in those old days in Greenwich Village Arts. That was a lot of fun. I got another question here about these things that are happening in April where we've got 3 major planets are moving into a retrograde motion. Does that have a lot of meaning? Because we had Norm Winsky on. He said that's going to mean quite a bit as far as volatility for the month of April. Any feeling on that?
Yeah, I think I had a mention of that. Oh, yeah. The bottom of the third page. Mm-hmm. Whenever there's a planetary station, 2 things happen. First, the power of the stationary planet increases enormously to activate the zodiac zone where the station takes place. Second, the planetary station sends an emphatic signal to the markets. As the planet changes direction, the markets sometimes change direction too. That's why we pay attention to station dates and the trading days just before and after them as trend change opportunities. And in April, we'll get 5 of them. So as astro traders, we can expect to be very busy. And that's a quote from Tim Boss that I had in my newsletter. Mm-hmm. But the 5 changes, there are 3 going retrograde and 2 going direct.
Mm-hmm. Well, that's a lot. Has that happened recently? I mean, I can never remember that many planets in 1 month going, changing stations. That seems very unusual.
Well, it means that a certain number of planets are so many degrees from the sun in one direction or the other. And okay. I guess we're having a bunching up a little bit now. We've had bunches in like May of 2000 and the 1987 harmonic convergence. There was a 5-planet conjunction.
Oh, I remember that one, yeah. Stay with us, Arch. We'll pay a few bills. We'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we're back and we're talking with Arch Crawford of Crawford Perspectives, the financial astrologer. Arch, we were talking about 1987 when we had the harmonic convergence. I don't know if you remember this, but George Lindsay, he passed away on that day. You know, the fellow from Three Peaks in the Domed House who was regular on Louis Rukeyser. You actually met Lindsay, didn't you?
Oh, he used to attend the SIRE meetings in New York, the Cycles Group, Society for Investigation of Recurring Events. And he spoke there, you know, several times over several years. But I visited him in his apartment in the Village once, and he showed me a lot of things going way, way back.
Mm-hmm. He was a relatively young fellow when he passed away, wasn't he? I mean, do you remember how old?
I don't remember that he was young. He was an old fart, like we are now.
Well, let's we won't go into that direction. By the way, folks, one of our listeners from TFNN from Alaska came in last week and took Arch and I out to dinner. So anytime you're in the Tucson area and you're feeling philanthropic, Arch and I will be happy to attend. That was really a fun lunch. I mean, I really enjoyed listening to the stories about Alaska because it's one area of Alaska. He lives at the top of the world, actually, and it was very interesting to hear the lifestyle that they have up there. For heaven's sakes, it was really quite amazing.
You know, instead of having a state tax, they have a state distribution.
Mm-hmm. Because they make so much money. Yeah. That's
right. So if you go there to live, they give you money, but not enough to live there.
Yes. Well, I know that a gallon of milk is like 9 times what it is here in Tucson. That was an amazing thing to really see that. That really was quite exciting to hear that. So anyway, getting back to the markets, we have one other question here from one of our listeners, and that is, do you use the aspects of the planets intraday when you do if you do any intraday trading, Arch? Like a specific time an aspect hits during the day, like the exact time of a full moon or the exact time of, say, a Venus-Uranus aspect? Do you do any of that? I don't know if you do any short-term timing at all because I just don't remember. But can you answer that question?
Well, one of the only times that I've ever done such a thing is that my March letter said to Eastern on March the 29th. The entry point was quite good, and it was profitable by, I think I told you on the Dow Jones it was a profit of 1.618%.
Wow.
But if the actual low was 2 days before that, so it would have been double the profit if you'd gotten out on the 27th rather than the 29th.
Okay.
But
Now
so yes, I do keep up with that, and some of these really strong things like new and full moons, in particular eclipses, things will occur to the minute. I remember the last time I did something like that, I said to short at a certain time on a Wednesday before option expiration in August of 2015, and I said on the Wednesday, Venus and Jupiter I think were aligned positively, and I said that looks really good for Wednesday, but go short at the time of that aspect. I forget what it was, but that instead of being the high of the day, that was the low of that day, and it cost me 60 points. So I don't know if people over at one of the firms were playing against me, or if that was the effect of the aspect. It was the opposite of expected. So, but then the market dropped over 1,000 points, so the 60 didn't matter too much by Wednesday, Thursday, and then Friday, and then it I said to cover it Friday afternoon, but Monday was the worst down day since 2011, and Tuesday was the low, down another 200. So, those were done on the times of day.
What's your feeling on the stock market right here, say, for the next few weeks, Arch?
Well, the really important thing that's happening today is that for several weeks, most of our main things that we watch, I mean, I'm not talking about just the stock indices, the dollar index, the interest rate, the oil and the gold, all have been caught between the 50-day moving average and the 200-day moving average for weeks, and suggesting not much movement and no determined direction. Well, they're breaking out today. The oil is well above the 50-day moving average right now. I mean, if I'd sent you charts last night, it wouldn't include these. The gold just popped above a trend line, the 200-day moving average, and well above the 50% retracement level today. I mean, this is the TNX, the rate on the 10-year has just dropped to the lowest since November at 2.27%, and it's right now at 2.31. But that's broken a neckline, or it's a flat pattern actually, because it's been between 231 and about 262 or 3 on the rate of the 10-year, and it's breaking this morning. And the dollar index, if it closes where it is now, it will be the first time it's closed above the 50-day for a little less than a month. So everything is breaking out today, and this could be a very important determination point on this date.
Okay, Arch. Now, how folks would like to reach you? What's the best way to reach Arch Crawford in Tucson, Arizona?
Well, you can Google Arch Crawford in parentheses, and that's the quickest way. It's CrawfordPerspectives@earthlink.net is the email, and the website is www.crawfordperspectives.com. That's a lot of letters, so it's easier to Google it, but if you put the letters in, you can certainly get here.
Okay. Now, we have another question about gold. What's your long-term feeling on gold?
Well, my long-term feeling is that currency volatility is going to increase around the world, and it will finally take the dollar with it. But as long as another country goes first, that's upping our dollar. Mm-hmm. And when the dollar goes, the gold will go absolutely nuts. But I hope that doesn't happen soon, but I'm afraid that it might.
Thanks a lot, Arch. We enjoy having you on. We'll have you on again soon.
Thank you so much.
Thank you.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to put up the chart of the NASDAQ because that's been the leader of the pack recently. And as you can see here, this is as of this morning, we made a 50% retracement of the whole move down from the 5th and the 7th. That was all included in the part of, the Syrian bombing and everything. So we did make a 50% retracement. We didn't quite do that in the S&P, and of course the Dow Jones is lagging very, very badly. So the key here, I think, is if we do close really strong today on a Friday, then it's going to be very interesting. And we're in a down week, so this will be an interesting thing, because if we close strong, this would make it an up week instead of a down week, and then we could possibly looking at some more of a rally. But right now, the longer-term trend in all of the stock indices, with the exception of the NASDAQ, has been, been to the downside. Now, there's a potential that this pattern that we had this morning was a head and shoulders pattern in the NASDAQ, which would in fact be a very bearish scenario. And as you know, longer term, these do look rather bearish. But with all of these markets, as like Arch Crawford just mentioned, we're having, rocking and rolling everywhere. We're seeing gold, crude oil, well, not the grains, of course, but all the other of the financial commodities are going nuts. Bonds having really wild charts. That's true. We are seeing some really strong topping patterns in Amazon, Facebook, and Apple. Thanks for bringing that to our attention. We've posted those over a period of weeks, especially Amazon, up at that 906 level. We hit 923, I believe. So we'll be watching all of those as we go through here, looking at some of the things that we're watching right here. Interesting now, folks, if you're into the bond market, keep an eye on the bonds, because we just made a 61% retracement of the whole move back we dropped the whole point and we've rallied back 61%. So this should stop here. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.